Here we go, here we go, here we go, here we go. It is Markets in the Morning. Let's go. Hey, what's going on, everybody? This is the Blockchain Backer, bringing you the latest cryptocurrency news and analysis. Welcome to Markets in the Morning. Today is Thursday, December 14th, 2023. This is Markets in the Morning, where we take a look at the price action of the Bitcoin price chart, the altcoin market, to see how the cryptocurrency market is doing. And of course, we'll take a peek over there at the stock market, which is set to open up in the next 4 minutes, continuing into all-time highs for the Dow Jones Industrial Average, and I believe the NASDAQ as well. We'll take a peek over there, of course, over there at the United States Dollar Currency Index, or the DXY, and we'll peek over there at precious metals to see what's going on. And then lastly, we'll wrap it up with taking a look over there at any type of financial news going on out there in the world and any type of crypto news going on out there in the world. So as we get kicked off for the day, of course, we're getting near halfway through the month. This is where I do put out a second newsletter for the month. If you guys know, we've been talking a lot about the altcoin market leading up into the moments of when things took off in 2021. What were those factors that were extremely important? I will be putting out that the last one to that series. That'll be out either tonight or tomorrow morning over there on blockchainbacker.substack.com. So those who are subscribed, keep your eyes open, trying to build the perfect portfolio of 2021 and then applying that to 2023 to try to use the same criteria of what a portfolio in 2023 would look like with that same stuff from 2021. All right, that'll be out later tonight or tomorrow morning. Keep your eyes peeled over there on Substack, link in the description. Now, looking over here at Bitcoin, we're at $42,644. The stock market is going to open up here in the next 2 minutes. As we all know, the stock market set a new all-time high yesterday. We caught it live here on the YouTube channel as we were watching the Federal Reserve. I have been recording a video all morning talking about this, talking about the state of where we're at. Of course, all about stuff with the Fed, of course, because that's going to be our narrative now, right? The narrative is going to be easing credit conditions, Fed cutting interest rates, YOLO, let's go to the moon. But of course, we've been talking all about the Dow Jones Industrial Average, the complications of where it's been up in here, whether retraces or whether the 4.236 extension. We know that Bitcoin, when it hit its highs, right, when it topped out, when Ethereum topped out, what did they do? They both exceeded that 3.618 extension. The market fell. Everybody said, just admit it's a bear market. Then they go rallying to new highs. And what do market participants do? They scream for 100K Bitcoin. They scream for 10K Ethereum. And then, of course, that was actually just a phase of distribution. So there's a lot to talk about here with the Dow Jones, and we'll try to look at it from a serious approach. I'm sure a lot of people would love to hear celebrations of the Dow. One of the really important elements for Bitcoin throughout history has been the mandatory requirement that the Dow Jones does go into a new all-time high in order for Bitcoin to be bullish and for the crypto market to rally. So definitely exciting to see that happen, because we know that is a mandatory condition. It is not block reward halvings. It is not 4-year cycles. It is not finite supply of volcano magic. It is the entire market, just in general, having liquidity floods come into it. And so right now, of course, it's really exciting because what do we have? One of those conditions are getting met. We have the Dow in new all-time highs. So today I've recorded a big video on that. We're going to talk about that also this morning, the complications that come along with that. But the first thing we will say that is positive about that is if we go back and look at the things that we've been talking about here on the channel for months on end, has just been what Bitcoin's been doing here in 2023 compared to what Bitcoin was doing back in 2020 before things rallied. The altcoin market went up 10x and everything was super exciting in that time period, right? All conditions are just like it is like practically the most identical thing we can imagine, not just from narratives, but from retail sentiment. The people who were screaming absolute bear doom town back here are just roaring bulls up here at the top, which is historically how things tend to go. But in 2020, what did we have? We had a big sell-off in here. This is, it doesn't look like much here like this, but this was a massive liquidation in the market where everybody screamed, this is manipulation. Then, of course, we had a 5-minute FTX-style capitulation or liquidation event take place back there in August of this year, and then grinding out, people screaming for lower prices. Same thing from back in 2020. We break out and go, we break out and go. But of course, we have some dotted lines on here. You guys are used to this little dotted line by now. We showed that this was the moment where the altcoin market was able to get moving. That's what we also saw happen in here, is that the altcoin market was able to get started in here, just as it did at the same location back in 2020. But there's a new little dotted line that I've added on here. Now, over the last week or so, we've been really showing what the stock market actually did at this period in 2020 and how similar things have been right now. You can see here in 2020 on the bottom of the screen, this is the Dow Jones Industrial Average. Into this moment of panic, just like we have over here, the stock market is falling. It does this ABC correction happening in here and then rallies up. We saw this over here in the NDXT. We see the ABC correction happening in here and then rallying up to the top. If you remember from just a couple of months ago, Bitcoiners were absolutely proclaiming victory that the stock market was actually falling while Bitcoin was rising, that we were breaking away. It's a new time. It's a new era. Things have changed now. But we actually had the exact same phenomenon occur back in here as we left this range right in here, just as we did here in 2023. Literally the exact same things. But we're looking over here at the NDXT. Down here, we're looking at the Dow. What's the difference in here is right here is this little dotted line. And this is actually the moment that the Dow Jones does set the new all-time high over here in November of 2020. It's actually on November 9th of 2020 that the Dow Jones sets its new all-time high. Well, we got the NDXT marching all its way back up, but it hasn't been at its all-time high. The Dow Jones hasn't been at its all-time high. Well, guess what? We get to actually mark it now. Here you go, December 13th. Now the Dow Jones sets its all-time high. So here we go. We get into these conditions in here, and the Dow Jones sets an all-time high after, years of just trash. And then here we go. We set an all-time high for the Dow Jones in here after years of just trash. So again, another element happening very similarly to what we saw from back in 2020, which it wasn't much longer after this that the whole market just rampaged and rallied, and it was an absolutely chaotic time. We'll go look at this here, show you that here we are October, here we are November, and then really the bulk of this market run all really takes place really until February, until when things start actually slowing down. But the big dramatic exciting stuff all takes place here pretty shortly thereafter. So here's November 9th, then big rally, and then really the bulk of this market was over by April. So it was really just a few months that all the excitement happened in the market once we got to this type of phase. So the questions I've been getting, of course, a lot yesterday was, hey, is Bitcoin going to a new all-time high now that the Dow Jones Industrial Average has done it? We don't know the answer to that, but what we know is we know that these conditions are clearly very similar to each other. There actually becomes a little bit of complication and nuance when it comes to Bitcoin because there is one requirement. The requirement for an all-time high for Bitcoin is that the Dow Jones goes into all-time highs. It is unequivocal. It's undebatable. It means that is not an opinion. That is a fact. The Dow Jones has had to go into all-time highs. And within 56 days of the Dow Jones going into all-time highs, that is when Bitcoin has gone into all-time highs as well. The nuance with that is that there are times where the Dow can set a new all-time high, but Bitcoin doesn't really follow along with it, because what's actually happening with the Dow is not the start of a bull run, but more so a short squeeze or an ending. And one of the times we can look back to that is really just what happened during our last cycle with C19, right? We actually spend years stuck in this broadening wedge. We escape from the wedge. Bitcoin doesn't follow along. Here, I'll overlay this right here. You can load. Anyway, there you go. So you can see we escape from it. It sets its new all-time high, right? This is actually over 2 years from this peak, right? This is over 2 years from this peak. We set a new all-time high. Bitcoin doesn't go with it. Then the market falls apart. So this is just still kind of a continued broadening wedge that's happening in here. And we go into the new high, but we don't follow along with it. So the question is, well, now that we're in a new all-time high, does that mean that Bitcoin's going to go into a new all-time high? there becomes that complication. And that's what we're going to talk about a lot in this video, especially since the narratives that are associated with why we're rallying right now all look to what? They look to the Fed. They look to the rate cuts and that we're going to cut rates. This is going to be absolutely epic and amazing. And so we're going to have to really kind of dissect the things that all happened in here. There's no question. Thank goodness we see it, because at least it opens that door. There is no chance, like this just has never happened ever for a bull run without the Dow Jones. I'm sorry for your cycle. I'm sorry, block reward having people. It's not. It's been this stuff. So a condition has been met. Now the big question is on the condition, is this a breakout into a bull run? Or is this distribution at the top of the 4.236 extension? And we're seeing something more like this as we're coming out of a pause in the Fed, right? When we're in pause, we set the high, a couple of cuts, we go a little higher, but then S hits the fan afterwards. That's the big $1 million question that we're going to be having going into the future. So we might spend some time on this in Markets in the Morning today, but this is definitely what I've been really recording on and diving into and talking about rates and the narratives, right? One thing is for sure, and it's the thing we expected, that you would see Euphoria out there on the market. You would see Euphoria out there on Twitter. I've seen all the same people who were calling for 100K, 500K, now screaming on Twitter. Famous people. See people who like to bring CNBC guests onto their channel. If you catch my drift, starts with a P. Saying, hey, this is the beginning of the most epic time of our lives, and there is certainly extreme similarities in here of what happened prior to like a multi-month Euphoria exciting period. But the big $1 million question here is this actually the distribution ending to a cycle for the stock market? Because we know that we're almost at the 4.236 extension. We know that this is how high the roaring 20s went before the Great Depression began. And we know this is the exact same distribution we did for Bitcoin and that we did for Ethereum. And so like looking at things like this, when you look at the Dow, let's see if I've got it. Please tell me I did it right. I did not. Okay. I lost it. But here we go. Right now we'll go here. There we go. Well, here's the NDXT. We'll try to get the Dow up. We'll try to get the Dow up in Bitcoin here. It looks like it refreshed itself before I went live. But as we can see, like in NDXT in distributions, these are things we've talked about for months on end, right? What do? We back test with an ABC, then we march our way back up. But in an event of something like this, right, where we just spend months working up in here, certainly it would seem logical that we could see some excitement happening in the markets. But to kind of keep it in mind that we could be playing a game of hot potato at this point. That as we get up in here, this is how high the roaring 20s went. This is how high it was before the Great Depression began. And this distribution structure is really identical to what we have already seen. And retail behavior is acting exactly as it would in these moments right in here. This is the start of a new bull run. This is awesome. This is amazing. And it's all based on the narrative of the Fed, right? And we have Fed rate pause cuts, right? So we have pause periods. We know that in pause periods we can rally. And then we know that once cuts start, S hits the fan. We know that we can have pause periods in here, set new all-time highs, we start cutting, could be a little rally, but then S hits the fan, right? And that is just what has happened in here, right? Rallying into rate hikes, rallying into pauses, then once cutting starts, right? What are we in? We're in the dot-com bubble. S hits the fan. And that seems to be the consistent thing. And so the market now is celebrating because it's essentially saying, hey, the Fed, you are going to be cutting. The market is now pricing in 1, 2, 3, 4, 5, 6 rate cuts in 2024. And that's not the market. Yeah, that's a little more excessive than what the Fed said, but the Fed was pretty clear. We're going to be cutting in 2024. We are done. We're going to be cutting. And they even state in here that recent indicators suggest that growth of economic activity has slowed from its strong pace in the third quarter, and inflation has eased. So dovish as could be. Definitely, he was asked a question of like, are you really going to start lowering before you get to the 2% target? And he's like, well, we have to lower before we get to 2% because we don't want to overshoot. So they're definitely capitulating on the idea that they're going to have to keep hiking until we get to 2%. But also, we've gone through this stuff here on the channel just in this past week, talking about CPI, and that in our next reading, we probably won't see a big change to CPI. But when we get like our February and our March readings, that we will actually see that the CPI fall into the twos, right? So that's when the Fed will be able to celebrate. And that's because we're going to have bigger numbers drop off from February and March that were there in 2023. So in 2024, when those numbers get replaced with new month over month figures, we're going to see a reduced year over year. So year over year, CPI right now is 3.1. Come the February and the March readings, we're going to see it actually fall down into the twos, potentially lower. My guess is somewhere between like 2.3 to 2.6% CPI is what we're going to end up seeing. And of course, we'll have the celebration to say the Fed did it. They completely achieved the soft landing. All is well in the universe. We can start cutting rates and there's no problems happening in here. But to just keep in mind these things happening in here. And what this obviously is like the scariest one you could look at when you look at the Great Depression and how that thing ended up topping and ended up falling over. But that's not usually what we end up seeing in here. This is more of a complete distribution structure that's actually happening in here. Let me see if I have this. I thought I did. Did we really end up losing it? Here we go. There you go. This will work. So this is this is Bitcoin here on the top. This is the Dow Jones Industrial Average here on the bottom. Right. And so there's really interesting things to take note of in here of how price behavior is happening. Right. So this for Bitcoin is exceeding the 3.618 extension. Let me take the Fed funds rate off here. This is exceeding this 3.618 extension like we see over here on the Dow Jones. And then, big pullback, right? What happens? Everybody's convinced things are doomed. It's over, game over. Laser eyes and diamond handers all leave. We rally back up to the top, and then everybody thinks we're going to $100,000 when we set the new all-time high. It's impossible that we're topping. It's impossible that could happen. We are going to moon. Don't you understand? This is very similar to what we've had happen over here for the Dow as we are back here, right? The Dow exceeds the 3.618 extension, roaring its way back up. And then what's really, really remarkable is just look how this thing gets back to its all-time high. Look how it gets back to its all-time high. This is the most aggressive move we've seen in the Dow really for over a year, right? It's been over a year since a move like that. And you could argue this is more aggressive than even the one that came off the lows because this one at least had some corrections happening along the way. This has just practically been straight line up constantly, which is very similar to what we saw happen in there. So the question will be, if this does end up being the top for the Dow Jones Industrial Average, will it be a super doomy, horrible time, or will it kind of be like what we saw with Bitcoin and what we saw with the crypto market and Ethereum in there, that, we peak up here above the high, pull back a little bit, and then we just spend months, right? We could spend months working our way in here to then kind of push up one more time. And that's very common in distribution that you see those things where you push up and you pull back and you push up one more time, and then things, get nasty in here. And that's just where we're at right now with the Dow Jones Industrial Average. But it doesn't mean we can't have something crazy happen or something exciting happen. And it's a very unique time. Mainly because, it's very similar to 2020, but it's a unique, I just closed my Dow chart. But it's a very unique time in regards to us being where we are, that, Bitcoin's inception happens in here. Crypto's inception happens down here at the lows in January of 2009. And the existence of it has been in here. And if we are trying to catch where this entire market cycle is going to turn itself around, this will be a different element for us. But the nice thing about it is that, we know we need the all-time high for the Dow Jones. It's like it's absolutely mandatory that you get the all-time high to happen in here. But two, it doesn't necessarily mean it's going to happen like in the blink of an eye. Like we just showed with topping structures, like even for like Ethereum's was more like this, right? So just because we go up here, it would seem unlikely to me to go like that. It would seem unlikely to me, but more that it is still kind of a prolonged type of distribution that would happen up here if that's what we are doing, which is my base case of what is happening here for the Dow Jones Industrial Average. But that does buy enough time for something crazy to happen in the market. Most people like to think that, hey, I spend 2 years in absolute trash town in crypto. When prices start moving, they say, how could you think it's almost over when it just began? But the reality is, of all bull runs in crypto, all euphoria moments in crypto, they typically only last a couple of months. We typically will, I always say it's 90% of the time we spend in trash, 10% of the time we spend in excitement. And it was one of those things I said a lot when we were at the peak of the market in 2021, saying like, hey, you know how we're all like holding hands and singing Kumbaya? It's not normally like this. Normally everybody is at each other's throats. And that's just how crypto typically is. But you know, if we have something like that, where we spend some more time working this up, working this out in here, where it is more like that style in here, we obviously buy ourselves more time to be able to be able to see the market rally. And really, the market only needs a few months. It's really all it takes for things to get rocking and rolling, and that's how long bull runs typically last, is just a few months. And multiple of the bull runs we've seen with XRP last less than a month. And you just see all the euphoria and all the excitement happen, and euphoria and blow off tops and all that stuff, and it all just happens really quick. And that's normally how it is. Most of the time is spent trashy, and then there's these brief moments in time that are very exciting, right? And you only need a few months for something like that. We'll be fair here. We'll say, you know, that's it, because this is kind of where Bitcoin breaks into its all-time high, and that, you know, that's really the extent of how much time you spend in here. 90% to 10. This might be a little bit less. Maybe this is 85 to 15, but it gives you a ballpark idea. But being into the all-time high certainly gives that optimism, and I think the thing that really gives me some intrigued viewpoints here is just it's exactly like 2020 was. It's exactly like it was in there, and you know, it doesn't mean we can't have a big rally that comes in the market, but definitely this is my radar. This is the thing that scares me in the big term, because it's not like I'm scared today or I'll be scared tomorrow. But I look forward to a year from right now that, you know, go through and look at Fed funds rates and what happens when we start cutting. And the market is telling us we're going to be cutting. Over the last 23 years, it insinuates that we're going to be having a recession. You know, the Fed is saying economic activity is weakening, right? We knew that, right? We figured that. And we figured that the pause is our exciting times of the market. But after that, when the cutting actually begins, we can get a little rally there to finish things off as the cutting does begin. But it's typically a sign of very, very bad things that happen in here. And this is exactly how the great financial crisis happened. So things that create a nuance, right, for all-time highs. So we'll talk about that. Is that we talked about this in here. I think we already covered it. Really, it's the bull runs, right? So these are every single Bitcoin bull run is accompanied at the break of the all-time high. This is the 2013 bull run for Bitcoin. It happens upon the break of the Dow Jones Industrial Average. This is your 2017 bull run for Bitcoin with the break of the all-time high of the Dow Jones Industrial Average. And this is your 2020 to 2021 bull run with the break of the all-time high for the Dow Jones Industrial Average. But the thing we know is we can have these ranges and we can have these Fed cutting stuff, which everybody's looking for as like the super bullish catalyst to say, hey, this means that we all break out. But we can have these all-time highs get set from these Fed cuts. But all it is it's buying just a couple of months right there before everything absolutely hits the fan. And so that's really the perspective that is going to be happening here on the channel, is that, hey, we're in this moment now. We've now kind of entered into this golden window of where if this market wants to absolutely lose control of itself, go for it. You're there. You've got the element you need. You've got the Dow. but I do think we're on borrowed time, right? So we are on a point at which we know cuts are coming. We can go back through the last 23 years and we know the first one or two can be okay. They can be okay. It's not that they will be, but over the last 23 years and the three hiking and pause and cutting cycles, it can be okay in the first one or two. But beyond that, testing luck beyond anything, right? And the hardest part of all of this is keeping emotions in check. We could go into a massive bull run and I could sit there and be the most serious person in the entire world the whole time while everybody's wanting, hooting and hollering and cheering and celebrating, because that's not what this is to me, right? This is this is all strategy. And so I probably will have lots of serious talks as this is all occurring in here, because that exists right there. And the second we lose sight of that and thinking this doesn't matter and thinking that, this time is different, this is precisely what happened with Bitcoin's, precisely what happened with Ethereum when we got through these levels back in 2021, right? That we rallied and surged back up. I remember I was on vacation, if you guys remember that. I was traveling with my wife around the United States, but I bought a laptop and I brought it with me, and I was doing live streams and making videos for you guys from all over the place, right? From Tennessee, Kentucky, West Virginia, all over the place. But we are in this moment and we're talking about that during that time. And then what happens is the crowd gets so sucked in, they get so pulled in that we are going all over, we're going way higher. But this is absolutely the exact same distribution structure. It's the same exact thing. And we're right here near the 4.236 extension. Doesn't mean we can't have like super YOLO, euphoric, exciting moments in here. But to think about it that we're on borrowed time. That's the way that I do think of it. Right now, we're still paused, right? We just got our pause. We're not going to have another Fed meeting for another 48 days. So we're still in the pause unless there's a surprise rate cut, which would be crazy because the market's not pricing in that there's going to be some type of surprise rate cut. It still says 81% probability on January 31st that we're still going to be paused with only an 18% probability that we will cut. But you move over there to March and they really start pricing in that we are going to be cutting there come March with only a 16% probability that we are going to be paused. And what does that mean? That means 83.7% probability that we actually are going to be cutting by March. So keeping all that in mind and not being fooled by the narratives of Fed rate hike cuts are good, right? We spent a lot of time on this in the last couple of years talking about, look, hiking cycles have not been bad, right? The 2017 bull run for crypto and the stock market during a hiking cycle, right? Pause periods, they're okay. They're good too. And as a matter of fact, these pause periods have been the things that have gotten these new all-time highs to get hit, both here in 2019 and 2020, and over here prior to the great financial crisis. As we leave this range, we're in the pause, we break out into the highs, the cuts begin, then everything hits the fan. And so right now we're in the pause, right? And so here we go, just like we have in the last two. During the pause, we set a new all-time high. As we get into that new all-time high, we're just going to have to not go with, and you could do whatever the heck you want. But here on the channel, it's going to be like that, right? We've known pausing periods have been good for markets. Cutting, we start getting real worried. But if you look on Twitter, the narrative is the opposite. The narrative is, this is the most exciting time ever because the Fed is going to be cutting. But I look at it from this perspective and I say, okay, the clock has started. The ticking has begun. The good news is prices are definitely behaving where they should. Like if you missed the very beginning of this, we've talked all about how 2020 and the similarities to 2023 in here, retail behavior, everybody's selling at the lows 2 months ago, right? All your favorite bulls today were bears 2 months ago, right? But this is the behavior of the NDXT. We, of course, followed this for months on end as well. Here in 2023, this is the Dow Jones Industrial Average. They did the same thing happening in here. These rallies and these breakouts of these long ranges that we get stuck in here happen during downtrends in the stock market. That was the same story here in 2020, that we break from this range in this downtrend of the stock market. But the thing that was missing in here in comparing 2020 and comparing 2023 is that where's the Dow Jones Industrial Average breakout into all-time high? We had it right here on November 9th of 2020. Well, here we go. We now have it over here on December 13th of 2023. So here we are in this same upward grind, and then we get the stock market to break out into the new all-time high. So, opens up the door of excitement. This thing is still there, right? Can't ignore it, right? This is just how Bitcoin has still behaved. It still has followed the whole 2014 through 2016 stuff. But when we're looking at like macro conditions in here, with Bitcoin, price structure, price behavior, what did we just get? We got the Dow Jones into the all-time highs. But the thing is, this is where not getting really sucked into the narrative of the herd again, right? So this is where the herd is definitely going to get all sucked in together once again. And this is going to be one of those times I'm hated by the general public. And that is what it is, man. That's what you deal with when you're 2 steps ahead, is that when you're trying to pinpoint these things and say, look, this is actually how the market behaved. Everybody's saying that rate cuts is a good thing. Pause periods are good things. As a matter of fact, the last 2 gave us all-time highs. Guess what? This is the 3rd one now. 3rd in a row, we get the all-time highs during the pause. The question is, look how close we are to the 4.236 extension. And so we're going to, on the channel, we're going to kind of view it through this lens. We're going to view it through the lens of, hey, it seems like for the next couple of months, we have really all the elements lined up that we really need. But things could change on a dime up here near the top, and we just have to kind of keep that in the back of the head. The low alpha person who goes on Twitter and just looks for trade calls on Twitter and follows people who are telling them that the Fed cutting is the big, that's going to be the general narrative, and that's going to be what the financial media narrative is going to be. I mean, you could just see it right here. Wall Street traders go all in on great monetary pivot of 2024, right? That is going to be the narrative moving forward, is that the monetary pivot has happened. That means we can go to the moon. And that is just not the case. We could reach euphoria. We could reach super excitement, and it actually is like 2020 and super dope and super awesome. But right, like it would be so off-brand. It would be so off-brand for me to not be like, oh, hey, yeah, see that 4.236 extension? We're just not going to worry about it this time. Nah, it doesn't matter. It does matter, right? So it's something that we will be watching moving forward. But this is certainly a lot of exciting things happening in here. The big question, of course, I keep getting is, we are in an all-time high. Does it mean that Bitcoin is going to go into an all-time high? We definitely have circumstances like this where we go into a pause and then we set the new all-time high with the pause. We start cutting. It keeps going. But Bitcoin didn't follow along, right? But the optimistic thing is just how similar this market really is to when it did go along in 2020. So we'll be watching this day by day, keeping our eyes on it. And these are really just all the initial things that I'm seeing in the market, is that, boom, we did the exact same thing, and then Dow hits all-time high. Same exact thing, Dow hits all-time high. So, it really could end up being very exciting, but it is borrowed time. Right, it is there, and if Congress bans themselves from owning stocks, there you have it. There you have it. That's it. And so that's I figured we talk a lot about this stock market. It's certainly an exciting thing to see happening here, but on this channel, it's definitely not going to be buying into the narrative that retail got wrong the whole way up. That interest rate hikes are bad for the market. The whole 2017 bull run happened with interest rate hikes, guys. Right? The pause period's good. It's not the cutting period that is roaring awesome for the markets. The cutting is where everything hits the fan. We can rally with rate hikes, right? We can rally with pauses, but then when those cuts begin, it really becomes that watch out. And that's the opposite narrative of what people are seeing out there right now, or their interpretation of what is happening out there right now, saying that, hey, we're going to have a bunch of cuts and this is great. While we're in the pause, it does tend to be great. And we've said that for months. It does tend to be great while we're in the pause, but not during the cut. So that's kind of the perspective we have. And I want to lay all that out there. Not that I haven't been laying that out there for a long time. But of course, you get a whole lot more attention and a whole lot more eyes on you when you actually get a moment happening like this. And so to have the full-blown expectation that this view will not be what the herds is, right? This will not be what the general consensus of the market is, thinking that this is still distribution, that this is still the ending. But what happens at endings? Extreme euphoria, extreme excitement, blow off tops, irrational exuberance, extreme risk taking. Hey, those are all the things we like for crypto. So those are good things, right? But to not think that it'll last forever, and we'll just have to see how much of it we can actually end up getting in here. But it's definitely exciting. Definitely one thing we want. Just, of course, knowing that how many percentage points are we away from the 4.236 extension? 5. Okay. Now, another thing too, with these things, of course, like you can go back and you can look at Bitcoin's market cap, you can look at Ethereum's market cap, you can look at the S&P, right? So let's pull up the S&P. The S&P is one of the ones that actually did exceed it, right? So we actually exceeded the 4.236. The NASDAQ has not gotten there yet either. So the NASDAQ is just shy of that 4.236 extension as well. But you can see these things wick above and push a little bit higher than that. And I know how a lot of participants in this market react. If we push above it, oh, does this change everything? Does this make everything completely different? Because we've wicked above, we've gone above the 4.236 extension. It's actually very common for us to actually do that. And you can even see that over here on Bitcoin's price chart, the market cap. That we go above, right? See, and we'll take us off log scale so you can kind of see it too, right? That would create a scenario of, oh my gosh, this thing is definitely roaring and going. But you can definitely see it in here too, right? What do? We get above the 3.618. Everybody's convinced the gig is up. The game is over. It's exactly what we saw in the stock market. Gig is up. Most Googled recession in the history of all time. Double of C19. Market rallies back up. Everybody convinced we go to all-time highs. We go into new bull market, right? This is what we saw with Bitcoin to 100K. It didn't matter how much I posted out there and that I thought there's zero chance we go to 100K. It was still, even of my own audience, 64% of my own audience thought I was wrong. And that's okay. That's fine. I'm here making my best educated guesses just like everybody else. But that will be my thought process moving forward with the Dow, as we have done essentially the exact same thing. So, okay, here we go. Outside of like being like gloom and doom future and the end of the world is coming in like a year from now, short term, hey, let's go, right? These are positive conditions to have happen in here. We're going to take it a day at a time. We're going to watch it a day at a time and see how it goes. But I can show you all these things to say, look, even when we did this here in 2020, here we are in 2023. In this exact grind we have had, that is also where the Dow set a new all-time high. And what do you know? We get it here in 2023. So unfortunate for all the 4-year cycle theorists and all the block reward having theorists if Bitcoin does end up setting a new all-time high, because once again, the Dow narrative wins. So no, finite money, volcanoes. All right. Whatever, man, whatever. All right, let's go ahead here. Right. All right. So yeah, we've all seen this stuff before. This still hasn't deviated from itself, but I don't think. Let's do this really quick. I do not believe we had a Dow Jones going into an all-time high in here. Oh wait, we got to go back. Oh, we don't have it. All right, let's go to Quorum. We'll go to Bitstamp. No, we kind of did. So there you go. So in this rally here, which is the one we're pointing to, you could see this Dow sets this new all-time high, but it wasn't quite ready, right? It wasn't quite ready. So that's why these complications can be in here for sure. So we actually have seen something a little bit like it, but I just don't think these conditions are the same. Right? This is your double tap. These are bull flags, the breakout, then the violent backtest happening here. It's just a different phase in the market that is actually occurring here for the Dow. I do believe this is more distribution that's happening up here for the Dow right now, but an interesting observation nonetheless. So there you go. Dow, new all-time high. This is what makes like true stuff here, man. If you thought we were going to 100K at the top, and if you thought we were going to 12K at the bottom, and if you now think stock market's going into all-time high, just be aware this was the exact same thing for Bitcoin back in 2021, like to the T. This is the same stuff happening in here. And I do fully expect that even pointing these things out and talking about it, we've been talking about this thing for a year and a half now, right? I don't know, 2 years at this point, right? Great Depression style scary stuff, right? And whether or not this would be a retrace and whether or not this would be a 4.236 extension, hard to know, hard to guess. Fortunately, thank God, getting the all-time high, because it would have been just an absolute horror show if we had already rejected from here and things just started falling apart. But just because we get into the new high doesn't change the distribution structure that is happening in here. And so you see that too, right? I mean, it really rallied real strong out of here, rallying really strong out of here. But just seeing that things can really kind of calm down in here after that once we get in here. I'm not going to do it here because I don't have my chart set up in here, but I went and studied like the markets and how they behaved in this moment in here. And the markets did still continue rallying all throughout here. So like you think to yourself, well, did everything hit the fan here and this one asset went higher, but the rest of the market only retraced and actually the real top was here and this first one? No, the real top was actually still over here. So, even if something like that does happen here in the market where, it's like this, and then there is a big thing like this, it's actually that second one that is the big worry. And so we'll keep our eyes on it. So I don't think this is the same as the Great Depression where everything fell apart in 3 years. That's what happened in 1929 to 1934, right? When everything popped, it was really just 3 years of just things just completely crashing and crumbling. But I don't think we have the same thing in here. I think this would be much longer, unfortunately. And it would be very similar to what we saw in Bitcoin, where it's a similar thing where even when the top does come in here, the market participants wouldn't believe that the top has come in here, rather than being like the Great Depression where it just straight lines down from there, where market participants still do believe this thing is still bullish, buy the dip, higher low, but it just keeps going down and down and down and down. So it was nice to be on the same side. And first of all, I'm still on your side, everybody who's altcoin people, right? The math wins for the altcoins, right? I mean, that's just simply it, right? A lot of my criticism of the narrative of Bitcoin and everything like that, that's fine. If you're chasing $100,000 for Bitcoin, then you're chasing a 100% gain. Good for you. That is generational wealth, and that's going to change your life. The math states that's if that's even possible, that's probably about the most you can get. It's just a couple 100% ever at this point in this stuff compared to the altcoin market. This is really the altcoin market's time to shine. And of course, with all those newsletters I've been writing, anybody who's been reading those things, you just see the math clearly. Bitcoin's the loser. It always is. It comes in last place once the market actually ends up getting moving. So it's not that I necessarily hate Bitcoin at all. I own some, right? I don't know if it's still number 2. I've had so many altcoins that have just been rampaging. It possibly has been overthrown and could have shifted down into number 3 or number 4 by now. But I own some, right? So it's not a super hatred thing. It's just that the percentages aren't there and the narratives are completely made up for Bitcoin. Back in the day, man, when it was called the FU money, right? Those were the days, dude. Now it's institutionals are coming in and they're going to be using it to sell to the retail investors and they're going to make commissions and that's going to increase demand. It's like, okay, that is not what Bitcoin used to be. It used to be F the system money. And I liked that. That was fun. I miss that. I could hop on board with that, but it's not that anymore. So, okay, there we go. I think we've covered it all with the Dow. Again, I'm recording a video. I've already recorded a lot of it and I'm in editing and we'll get that out later this morning. But otherwise, crypto, altcoin market, right? Recovered the craziness that happened on Monday, back up there near those levels once again. Still have seen several coins still continuing to rampage up in here. DXY 101.94. Again, the crashing structure for the win. For those who have been watching, we've talked all about this. 1, 2, 3, 4. 1, 2, 3, 4, 5. It rolls back up to wave 4 within wave 5. Bam. Right. So typically what happens in these types of endings is that eventually this thing finds some type of bottom somewhere. And we usually will see another one, and then that is the completion of it. I've drawn that out crazy style. I don't know how much time that would take to end up playing out in there. Either way, as long as it keeps falling, we can keep celebrating. But in a crashing structure, this was exactly as you all know. For those who watch markets in the morning, there you go. Gold, killing it, $2,044. Silver killing it, $24.09. So, of course, after taking those beatings the last 2 weeks, after those all-time highs got set in there, some slight recovery is happening over here. So the battle rages on, right? Here you go. How many days? It was Sunday night, right? So it was, 10, 11 days ago. Gold sets its all-time high, fails. Now Dow sets its all-time high. What comes next, right? So exciting, wild time up here at these heights right now. But as we can see, precious metals are now rallying back up with the DXY sitting below 102 at 101.94. As for stocks, a little bit mixed out here. You got Ford rallying with ARK and Caterpillar. Hey, ARK at $52. Hey, dude, one of those other ones that I bought at the lows, which is still pretty near the lows, with Coinbase, right? Coinbase, I think, got it like the 40s and the 50s. ARK, I think my entry's at 46. But it's in the green, so we'll take it. United Health, Microsoft, and Netflix in the red today. Leaders Ford, ARK, and Caterpillar. Yields getting absolutely demolished. Look at the 10-year yield, 3.947. So get ready for those interest rates, those mortgage interest rates to start coming down. So, yeah, like big time. So I guess that's a good thing for those who've been looking to buy a home, but really all yields are getting absolutely pummeled in here. Mostly those longer duration yields. You still are above 5% on short stuff like 2, 1, 4, 3, and 6. But all the longer durations, including the 1 year down to 4.89, everything else much lower. And then now we even have the 5 and the 10s into the 3s. Whoa. There we go. Anything else to talk about in here? Looks like gasoline is up pretty good today. Let's take a look. Again, gasoline had a big breakdown happen within the last couple of weeks. So nothing too big to say about gas at this point. Still sitting really near the lows. You should be paying the lowest prices over there at the pump that you have probably seen in years at this point. NDXT, how are we doing? We're still marching up in here. Everything looking good. Very optimistic conditions in here for crypto. We'll see how long things go. So like just to give you an idea, right? How many days later was this? This is November 9th. It was December 16th, right? So how many days was that? 37 days. It was 37 days after that moment when the market went absolutely bonkers. I don't have a way to predict time on something like that occurring. I'm still, wishy-washy. Even if these things are the exact same thing, does this mean you are only this far into it, or does it mean we're actually way up, way further along? So time-wise, don't know. But what you can look at throughout any time, if it is going to rally with the stock market, if it is going to go, the longest it has ever taken is 56 days. That's the longest ever. I think we got it all, guys. I think we got it all. Just headlines, of course, of being excited about markets, right? Retail sales rose 0.3% in November versus expectations for a decline. So retail was better than expectations, which they thought it was going to go downward. Instead, it still continues going upward. Dow is set to rise to fresh record as investors cheer strong economic data and falling rates. Here's why bringing down inflation has been different this time, according to Jerome Powell. LinkedIn shelved planned move to Microsoft Azure. All right, Moderna. Yeah, we don't. All right, Wall Street traders go all in on great monetary pivot. You know what's interesting about this too is that remember when Bitcoin became the headlines at $42,000 a couple weeks ago, and we're all like, "Here we go. There's your financial media bringing you in." It's still at $42,000 after Bloomberg said 500,000. All right, Wall Street traders go all in on great monetary pivot. Trump pulls ahead in Michigan. U.S. retail sales unexpectedly rise in a solid start to the holidays. More Moderna stuff, more Putin stuff. Wall Street makes zero progress in energy finance transition. All right, as for crypto, multiple DApps using the Ledger connector library are compromised. Whoa. I have to look more into that because I'm going to report that stuff on you. Let's go ahead and try to read it, huh? The front end of multiple decentralized applications using Ledger's connector, including Zapper, SushiSwap, Phantom, Balancer, and Revoke Cash, were compromised on December 14th. Nearly 3 hours after the security breach was discovered, Ledger reported that the malicious version of the file had been replaced with its genuine version at around 1:35 p.m. UTC. Ledger is warning users to always clear sign transactions, adding that the addresses and the information presented on the Ledger screen are the only genuine information. If there's a difference between the screen shown on your Ledger device and your computer and phone screen, stop that transaction immediately. I do use that strategy, that extra precaution in there, that if you're looking at your device, making sure that it says the exact same thing of what it says on your screen, and then also checking it also with wherever you're sending it to and making sure that's exactly what's showing up on your screen. SushiSwap Chief Technical Officer Matthew Lely was among the first to report the issue, noting that a commonly used Web3 connector was compromised, allowing malicious code to be injected into numerous DApps. The on-chain analyst said the Ledger library confirmed the compromise where the vulnerable code was inserted into the drainer account addresses. So, scary. Again, make sure, double check those addresses on your actual device and make sure it is the exact same place where you actually are trying to send it. Okay. The sushi hit by front-end exploit, compromised Ledger linked kit endangers other DeFi protocols. Yeah, I'm thinking I'm going to start removing a lot of my stuff. I keep a lot of my stuff on various devices and places, and I'm going to start kind of dwindling down a little bit on Ledger. And how I keep my stuff stored on there. But okay, there you go. That's it. Celebration station as the Dow Jones is in all-time highs, and this also occurs in the same place where it did for us back in 2020. Hopefully leading to a couple of really exciting months here in the cryptocurrency market. But again, being 2 steps ahead and understanding where we're at. This is at the 4.236 extension, very close to it here for the Dow Jones Industrial Average. And we'll be on caution at all times. But there we go. 52 minutes of rambling. I don't know. I thought it was all right. All right. I'm going to go ahead and hop into the chat. Again, guys, for those who don't hang around, there will be another newsletter published either later tonight or tomorrow morning over there on blockchainbacker.substack.com, wrapping up all these things of developer data, circulating supply, inflation, and percentage drawdowns to try to see if any of that data could have created the perfect portfolio. Like, how do we beat what the top 20 would have been? Is there something we could have done to even beat developer data? That's what I've been working on, and I actually finished it yesterday. Today it's going to be proofreading and recording, and so I hope to get that out later tonight, but certainly by tomorrow morning. You can check that out at blockchainbacker.substack.com, where I also record them with my voice, and you can hear them and go on a walk and listen to me explain it to you. Okay, there you go. Let's hop into the chat, guys. Thank you guys so much for tuning in. Thank you for being here. You guys roll. Thanks. Mark Potsy, new member, welcome. Spags, developer activity on HBAR is about to hit 10K. I don't know. But I mean, it's definitely in the top 5, right? So I'm all about that. Thank you very much. Texas Takeover says it's been a member for 6 months and says hit the like button. That's right. We have 2,825 people in here. We have 1,000 likes. It's always nice to hit over 1,000 before we get 1 hour. But of course, that is the number one way to support the channel. Is just hit the like button. Super chat's not required. Membership's definitely not required. Just totally hitting that like button is the best way. And some of you guys do that before you even watch a video, and I appreciate it. All you have to do is hit X on the chat, hit like, and then hit live chat. And it takes 2 seconds. Philip Mann, member for 6 months, says smash the like button, fam. Thank you very much. Philip then gifted a BCB membership. Brother, thank you very much. Pat gifts 10. Pat, thank you, man. I appreciate it as always, man. Stephen Edinburgh gifted 5. Man, you guys were on a tear there. This is right after the stream started. I'm like getting to you an hour later. I'm sorry, guys. I always try to get through the content first. Texas Takeover had gifted 1 as well, man. Thank you very, very much. Baby Oscar Hernandez. It's been a while, Baby Oscar Hernandez. Goo gaga, amigo. And BCB, if BCB retrace is XRP still all-time high? We sure hope so. We have to watch and see how it goes. Ben, even if XRP will never hit its 4.23 extension, I still want to thank you for changing my life and being such a big part of my life. Keep up the work, BCB. Ben, brother, thank you very much. 5 months. CB, member for 7 months. Fun fact, this is the first December 14, 2023 you'll ever see. Make the most of it. Oh, the finest. This is the finest December 14th of 2023 that you'll ever see. Make the most of it. That's right. You only get to live this day once ever. My daughter has really big, like, what's the term? I don't know. Oh, come on, think of it. She really holds on to things. Like, she can't let go of stuff. Right? If I said that to her, she'd probably get sad. I'll never have this day ever again, and it'll be gone forever. Zoltan Vakuya gifted a BCB membership. Thank you, brother. Tino, do you see a possibility for only tech and crypto to go into a bigger bull run after crashes while the economy and traditional stocks get weaker? Do you see a possibility for only tech and crypto to go into a bigger bull run while the economy and traditional stocks get weaker? I mean, we're just kind of creating different scenarios there of things that have never happened. Look, anything is completely possible in markets, right? Anything can be a surprise. Anything can end up happening. But how do you make any decisions based on any of that, saying this time is different based on literally the crap that I made up in my head? And I'm not saying that for you, but that's what retail will do. Like people, this time is different. The Fed is going to be cutting, and that's bullish. It's never happened. It's not true. The last 23 years, it's not true. The last 3 hiking cycles, which everybody said, don't fight the Fed, was the time to buy. It was time to roar. And so the narrative will change and say the soft landing this time was different because of inflation. And, we create these things in our heads to satisfy our biases of, the most Googled recession. And then this thing just whipsaws off the bottom, right? It goes back to the 702 retracement and leaves a lot of people behind there. And then we spend a year of just complete garbage, right? A whole year of complete garbage. But the thing that I don't do on this channel is say, I have a gut feeling things will be different. I have just this gut feeling that everything's going to act differently. And that's just not like my style, right? My style is to be like, what is measurable? And to say, what happens in these specific scenarios? What are the things that usually happen in these scenarios? And not my gut. And especially not whatever the herd is doing. Whatever the herd is doing or believing, or whatever the herd is posting over there on Twitter, wherever they're rallied against, I'm always opposing. I'm always going to have the most haters on Twitter in the world. And that's okay. That just comes with the territory because you're not satisfying the general herd's biases of what they want. At the lows, they're going to be super mega bears because they felt the pain, they let go, they want to buy lower. At the tops, they're going to want higher because they bought. They don't want to be told that the prices are going to go down from there. And so I'm always going to be hated. There's at least the thing that is so refreshing is that there is a large segment of people who recognize that. I wouldn't have 2,694 people in here if the whole herd was like that. There's a lot of people who actually use their brain, and that's so refreshing. But when I talk about, the herd, we always have to refer to everybody collectively. And I make those statements. I've told the story the other week of how my computer science teacher back when I was in high school, he told us we weren't special. Right? You're not special. You've been told your whole life that you're special, but you're not special. And so it's been kind of a little joke here on the channel. Of course, everybody is literally special in their own way because everybody has had their own unique experiences. Some people are very kind and very giving and have genuine good hearts. Some people will stop on the side of the road to help a wounded animal, or you'll stop and help a car crash or something like that. Whereas some people will just keep on passing by and they don't care. But there's lots of people that are actually special. But what's not special is just our emotions in markets. We all are like in the same boat together. We're all feeling the pain. We're all feeling the euphoria and the excitement all at the same time. And there's nothing special. It's something that just happens with markets that triggers those specific chemicals in our brains that make us really happy and excited. And then there's those ones that make us want to crawl into a corner and cry. And that's not special. We all have that. And so that is not a unique characteristic of us. It's programmed in our DNA to make us not special in that aspect. And so going against that, it always poses its difficulties. So, that's just what we do on here. And hopefully a lot of you, I know a lot of you did learn a lot in multiple different scenarios where we've gone through that. So, okay. But to sit here and say, is there a possibility for tech and crypto to go into a bigger bull run while the economy and traditional stocks get weaker? There's no historical context for that. The only historical context we have for cryptocurrencies is this whole moment right in here. We start here. Every single time the Dow stops, these are our big bear markets, right? This is 2014, 15, and 16, right? This is 2018, 19, and 20, and this is 2022 and 2023, right? So what happens in that event? We would have to really be going off of nothing that we've ever had before to make that type of assumption, right? So I have to go based on what has the market done before, and also under the assumption that if this is the end of a full-blown cycle, it is also different, right? It does make this time different, not from the aspect of what people would want to hear, that, oh, it's totally, we're going forever, we're going up to the upside for forever. It makes it very different in that the creation of Bitcoin happens right here into the greatest bubble of our lifetimes, of most people's lifetimes in here. I mean, I was thinking about it today. Anybody under the age of 35, you haven't been through a recession. At this time, even here, if you went through all of this in here, if you're under 35, you were likely in high school, right? You didn't really experience what it was like to be a home buyer here, right? At this time, if you're under 35. And so most people just don't have any reference point, especially participants in the crypto market. I don't know what the average age is of people in crypto. Anybody know what the average age is? But that would indicate that the average age of a cryptocurrency market participant has not experienced what a true recession is like, has not experienced what it's like to have to accept whatever job is available that pays really crappy, and you never thought you would ever be working that type of job in your life. Because you just need to make sure you don't foreclose on your house and you put food on your table. That's what a recession is like. Not the stuff that we have right now where there's two jobs for every, two job openings for every person looking for a job, and you can just leave and go get a higher pay. It's not what a recession is like. A recession is like there's too many workers, not enough jobs, and you just kind of become desperate to get something to just make it through a couple of years and pay the bills and survive through that. Anybody under 35 hasn't experienced that. And so, if that's what is coming down the pike at a 4.236 extension, I don't know. This will be a different moment for Bitcoin in regards to the bubble is lost. Not that, because it's different, it means we can soar more for Bitcoin. The question is with the long term. What's the long term behavior of Bitcoin? Because it's not Fourier cycles. It's not block reward halvings, because even all this stuff we're talking about here, we're at the phase that we were with the stock market from back in 2020. No block reward halving yet, right? So, I couldn't place a bet on that. I couldn't place a bet on it, right? I think the best case scenario, right? I'm going to be sitting there screaming at the 4.236 scared, right? That's just what's going to happen. It would be off brand for me not to do it, right? You're going to have people praying to God I'm wrong so they can post on Twitter, this dingus knows nothing. That's fine with me. It would be fine for me for the stock market to rally and to keep going higher than the 4.236 extension. And in the back of my mind, of course, that's what I cheer for. That's what I would love. Let's make it. Well, it was a David Hunter who called it the echo bubble, right? Let's create an echo bubble. Dear God, create an echo bubble. Because the scenario that happens of a 4.236 extension is not a great outlook moving forward. So it's not something I cheer for. It's not something I want by any means. Don't be misconstrued to think it's what I want. But it would be very off-brand and to think we're getting through it when we've done distribution here, and it's the exact same height of what the Roaring 20s was before the Great Depression. And this is exactly how Bitcoin and Ethereum's tops happened, where we exceeded the 3.618. Just admit it's a bear market. We're never seeing new all-time highs ever again. And then just like over here in the stock market, the most Googled for recession of all time. I mean, people think it's any different here. I remember how many people were screaming at me that don't fight the Fed. There's no way this thing is rallying. This thing is not going back even to retracement levels, right? I'll always say we'll get back to retracement levels. Getting to those and getting through those retracement levels is the big thing. It's the big unknown. But we go back to them, right? Not here. It's nope, we keep going. We're going to die. Now it's up here. It's like, nope, we keep going forever. You're wrong. And, I will always be on the opposite side of retail. And I think you guys know it. I've met a lot of guys in person. You say, hey, look, man, don't listen to the haters. Don't worry about them. And you're totally right. But I always have to remind everyone that I know that going into it, that I will be hated, slandered, and called a lot of stuff. And that's just the name of the game. So that's what happens when you go against the herd. All right, moving on. Eric Martinson, brother, thank you very much. Sixth Thinker as well. Both of them gifted a BCB membership. I appreciate it, brothers. Boomer Dave says there's another outcome that nobody is talking about. The economy stays strong and the Fed stays paused for all of 2024. Yeah, but that's not what the Fed said. The Fed said we're done. And I get it that we want to say, yeah, but the Fed has lied. I understand that, but you have to say this time is different. And like that, they've essentially done, here's what the Fed has done. The Fed has done what the market has priced in, right? Wherever this leans to, that's where the Fed has gone. So right now it still says paused come January 31st of 2024. I'm always going to go with whatever this says. And if this thing says 50% chance on either side, I'm going to say, I don't know. Because it says 50-50, right? I don't have a way to price in this better than all these hedge funds and all these guys do. But right now it says that we're paused. But then you move forward one more. March, 84.7% probability that we're going to be cutting by March. So with the Fed saying that they're going to be doing at least 3 rate cuts in 2024 and the market pricing in 6 rate cuts in 2024, this is different from 2022 where the market was like looking out way ahead and saying, hey, you're going to be cutting within 6 months. And the Fed's like, no, we're not. No, we're not. You guys are wrong. Instead, this time it's both aligned. The market is pricing in rate cuts and the Fed is communicating rate cuts that are coming. And that is very consistent with what we do exactly at each of these hiking and cutting cycles in here for our last 3, right? So pause, it sets the new high, they start cutting, everybody YOLO buys the top into the cut, and then everything falls apart, right? Pause, market sets new all-time high, they start cutting, everybody YOLO buys into the top, things really fall apart. Pause, we set into the new all-time high. We're going to start cutting pretty soon. It looks like we are. Everybody's going to YOLO buy into the top. And then what comes next, right? If we're going to even look at the Fed funds rate, if we're going to even pay attention to what the Fed does, those are their own individual things to guess on, right? This was a technical move. And then we're at the 4.236 extension with distribution. So, yeah. Hopefully you're right, brother. I'll take your scenario over this any day of the week. I'll take the big L on my forehead in that scenario, no problem. I'll survive in that one. The freakish fish says, "Will you personally be shorting the Dow?" No, probably not the Dow. I don't know. I mean, I'll look at it. Right. So I've had some hedges open, right, but I haven't taken my Michael Berry shot. Right. My Michael Berry shot will come in the event of like this. If it's very clean, if it's a very clear setup, I'll take my Michael Berry shot. Let's get all that off. There we go. I'll take a Michael Berry shot if we end up seeing, like, you know, whatever this thing does, pulls back, new high, and hits 4.236. I'll take the Michael Berry shot there. Where that'll be isolated into, we'll see. BCB crashing. Thank you, the freak fish. JB Heavy Equipment Services. BCB crashing structure on daily DXY. So this is what we have been looking at for weeks now, counting that crashing structure, and then the roll back up to wave 4 within wave 5. We pretty much bring this up every single day for the last couple of weeks, especially in here saying, look, you know, getting back to that wave 4 within wave 5 and then the new low. So now we got the new low. Whether that's enough for today, I don't know. We said, hey, like a logical place for it to get to is between like 101.5 to 102.25. We're now in that range, and now it's just going to be, you know, the bottoming process in here, and, you know, how long does this thing take to work itself out in here. So like in crashing structures, what do we usually see? You'll see things like this, and you'll see rolls back up, then we'll see ABCs, and then that's the end of it, right? That's my best guess. I definitely, DXY is one of my struggle points, right? I think we all know that. But we did get this recent one, right? The rejection at the 50% retracement, and we got the crashing structure right. So, hey, chalk it up for a couple of them correct lately. But DXY is certainly a struggle. But typically in crashing structures, these are how they end, right? One more dip to another low after this, rolls back up, then you ABC, and then you're on your way out. So hopefully we see just absolute euphoria, market raging stuff happening in here. Or as most people want, just to keep on crumbling down, just gobbling down for the dollar. So I don't see that, but it's not like I'm opposed to it, right? Judd gifted a BCB membership. Judd, thank you very much, man. Not so special, Dingus Guppy. You are the goose that lays the golden egg. Thank you very, very much. I love your name. Jordan Novelli. How long was the top when the depression hit? It was a blow-off top. We still have it on here. Do I need to go grab it again? We'll go grab it again. Right? It's always a good exercise because this shows that I'm not sitting here manipulating this chart. So we have to get off of log scale, go to linear. There you go. Okay. You can see that this is exactly the Great Depression, right? Blow off top, and then everything hits the fan. You could see the broadening wedge that happens in here prior to it going, right? So here we go. We're going to move it on over here. We'll start ourselves without looking up at the top. Start ourselves from the legitimate bottom here. All right. So we're going to start this rally here right at the bottom of where, let's get it perfect. Okay, we're starting literally at the bottom of where the bottom of the Great Financial Crisis comes in, right? So we know the Great Financial Crisis is the same thing. It's a broadening wedge, right? Higher highs and higher lows, right? Higher highs and higher lows before we go off into the roaring 20s. And I'm going to get this one lined up just right. right? There you go. So we can see we are starting in the same places. And here you go. Not altered. Totally there, right? So how does this one end? Like that. That's about how fast it went, right? For the finality. Don't know. I don't know if it's going to look like that, right? All I know when it comes to a top is that this is the level where it can happen. The structure of it occurring, that's really difficult thing, really difficult. But if we look at like Ethereum or if we look at like Bitcoin, when it did this similar thing recently, they tend to not continue in this straight line. If we continue in the straight line all the way to the 4.236, holy cow. So there you go. Sofrazen. Thank you. I've been here with you since 2020. Would you buy a house right now? Am I wrong to assume that if there's 6 rate cuts, then home prices will increase? I'm not going to give you home buying advice. That's always a market thing, and prices are high. There is no question the prices are high. If this is our long-term future, would prices get cheaper? Yeah, in the long term. But I'm by no means spend much of my time studying the housing market and the nuances of housing market, right? And do you think if we cut by 1.5 points, so if interest rates go from 7.5 to 6%, that's going to stimulate massive home buying demand? I don't know. I mean, the majority of America is locked into 3 to 4% interest rates. So is it like super alluring for 6, super alluring for 5.5 or 5? I don't know if that'll spike demand or not. And I don't know the narratives of this. Like that, here's the thing, right? Here's the thing that keeps me up at night. That's like, okay, I need to go fill up all my bottled water. I need to get my flashlight batteries all good to go. I need to make sure I have canned food ready to go. Is that what happens in moments like this? This is where your black swans show up, right? This is where an event can happen that takes the blame off of everybody, right? So everybody wants a macro. For me, they're like, what's your macro forecast? And it's like, okay, well, based on everything that's happened over the course of the last 5 years, and that we could anticipate the standard deviations of COVID-style events occurring, that we could anticipate one in approximately 4.3 years from right now, give or take a year and a half. I don't have a way to predict the unpredictable events that end up happening in here. The only thing I can say is show me a chart and I'll tell you the news. That's primed for some news. Primo. But as for a house, I don't know. I don't know what's going to happen with the housing market. I don't know if an event like this did occur, something like this, what would happen to the housing market? Is it time to FOMO buy a house? You need to speak to somebody who's a housing pro. Definitely not me. But thank you. One rough weekend. My wife cracked up when you said we are not special. She agreed and told me to send you money. All right. Well, thank you, One Rough Rican and One Rough Rican's wife. Taylor McLaughlin. Do you trust keeping money in the banks when the market starts crashing next year then? Would you consider splitting your money up into multiple Yeah, I don't keep my wealth anywhere in one place. I am so spread out everywhere. That's just because I'm partly crazy. But, they're theoretically FDIC insured. You're supposed to be protected. I think we all have a little bit of skepticism on that in the event of a major one. And if that's just something to keep us all at bay and not bank, not freak out. We don't know what would happen in the event of like super mega big ones, right? But you would assume that the Fed and the Congress would bail out the banks. But yeah, to each their own. Yeah, that's the initial allure for me to crypto was not having a bank, right? Gold and silver enthusiast, right? Not having a bank. Up to you. Thank you, Taylor. John trades. Can you look at comp, uni, or the dot chart? John, I'm not going to be able to pull up all those charts right now. I think that there's just altcoin charts, man. And today we're already at an hour and 19 minutes just to pull up different various altcoin charts. It's all the same stuff, man. And the market is moving together. When people get real sucked into what their one altcoin is doing, keeping an eye on this and then paying attention to the data that's important. Is there high development activity on the coin that you're caring about? Is there actual interest in the coin that you're caring about? Comp and uni, you'll have to look into those for yourself. But with Polkadot, there is high development activity and interest in that one. Up for debate on comp and uni. But here's how the whole market is moving together. And we could see that. We could see everything is dandy, but each individual one, Oliver K, new member, welcome. All right, guys, that puts us in an hour and 20 minutes. So what I'm going to do now is I'm going to go finish the video, get the video published. After I publish the video, I'm going to go ahead and proof and edit the newsletter with that ultimate altcoin portfolio of 2021. I'm going to get that released out either tonight or tomorrow morning, definitely by tomorrow morning. Otherwise, you should get a nice daily dose of me as we did yesterday. So guys, I want to thank you all so much for watching. Of course, you can check out those newsletters at blockchainbacker.substack.com. There is a link in the description of this video. Here, I'll post a little link in the chat. Eric Martinson, brother, thank you very much. Of course, you guys can check out bcbacker.com if you prefer videos, right? So there are audio recordings of all of these. I do have all of it. Decoding altcoin performance. There you go. I've never done that before on the channel. There you go. There are audio recordings there of the newsletters if you'd rather have them read to you. So while you go on a glorious walk or while you fall asleep to some ASMR BCB, or you could check out, for videos, you could check out bcbacker.com. So, all right, guys, that's going to be it for this one. Eric, again, thank you very much, guys. Thank you all for your support. Thank you for tuning in. I hope you found this information and this perspective unique and interesting. I hope you all have a wonderful day. It's Thursday. We're almost at the end of the week. Dang. All right, that's it. Thank you so much for watching. If you could, please like the live stream and give it a thumbs up. If you're new to the channel, please subscribe and hit the notification bell so you can be notified of when I create new content and when I go live. As always, this is not investment advice and I am not a financial advisor, but if you ever need a pick-me-up or a little bit of reassurance, just remember that the blockchain backers got your back. Have a good one.